Good morning, Steve Freed in Chicago with the morning grain comments. Markets are lower overnight, and for the week we've had quite an interesting week in price discovery of grain futures. The week started out with USDA coming out with a bullish soybean, corn, and neutral wheat report. Markets rallied sharply, led by the soybeans, with the U.S. crop estimate as of September 1 lower than expected. We have then saw some kind of rally in the wheat market, a little bit in the corn because of a potential nationwide U.S. railroad strike. Yesterday, though, the railroad and the union came to a contract agreement that the union still has to vote on, but we took a lot of the premium in the wheat market out. Overnight, we're seeing the grain prices lower, I think in part because when we saw 4 weeks of U.S. export sales data, we saw that the corn was disappointing, the wheat pretty much in line with last year, but the soybeans were higher than expected, and that was probably in line with talk that going into this year we had a record soybean export sales on the books, and since then we've seen some buying. The problem is that when we look at U.S. wheat prices, Russia's cheaper. When we look at corn prices, Ukraine, Brazil, Argentina are all cheaper. And when we look at the soybean complex, Argentina soybean, meal, and oil is cheaper than U.S. Brazil meal and oil is cheaper than U.S. And China may not be buying as much beans for import as the USDA is forecasting. The August China data, though, was an improvement with industrial production a little bit higher than expectations and unemployment a little bit lower. But still, with the tension between U.S. and China concerning Taiwan, China may try to buy as much as they can as far as soybeans are concerned from South America versus the U.S. That could bring U.S. soybean exports down closer maybe to 1,900. The corn commitment suggests that without increased corn sales, corn exports could be down to 2 billion, which adds to the carryout and offers resistance going into the harvest. NOAA's 90-day outlook calling for warm and dry conditions across most of the Midwest, which should help maturation and harvest, but could cause a problem in planting next year's hard red winter wheat crop. We also note that in Argentina, they're suffering from continued dry weather, and could be the driest period right now in 30 years for Argentina. That is reducing their wheat crop ratings. If La Nina sticks around through January, we could be watching for another potential dry year for both Argentina and possibly southern Brazil. Central China continues to be dry. Most of Europe's getting rain except for France. Russia's getting some rain, and we'll be watching pretty closely any action by Russia on Ukraine export corridor. As always, these are my thoughts and not those of ADM Investor Services. Have a good trading day and a good weekend. And remember, always treat people like you yourself would like to be treated.